So my wife was right and we made a lot of money. More about that in the weekend edition because Oracle just shocked Wall Street with a record-breaking 455 billion backlog and blowout growth. Just look at this 42% jump in after hours, actually, and also today. Also did bring in a new all-time high for Oracle. But the question is this the beginning of a new AI infrastructure giant? So let's break down the numbers, what they mean, and where Oracle could be heading in a short, medium, and long-term perspective. So first of all, the numbers. We got here a earnings breakdown, something like this. Oracle reported 14.9 billion in revenue, up 12% year to year. Cloud services hit 7.2 billion, growing 28%. But the real star was OCI, Oracle's cloud infrastructure, surging 55% to 3.3 billion. Earnings per share came in at 1.47 billion. Non-GAAP a 6% increase, while GAAP EPS dipped slightly to 1.01. Now, why did the stock explode after hours? The massive catalyst was Oracle's remaining performance obligations, essentially its backlog of future revenue. This exploded 359% year over year to 455 billion. So what this means for Oracle? Well, a lot of growth in the upcoming year. So management even teased that this number will soon cross 500 billion. Now, these aren't small contracts. 4 of them were multi-billion-dollar AI infrastructure deals. So the multi-cloud strategy is also a huge payoff for Oracle. Oracle now partners with AWS, Microsoft's, and Google Cloud. So AWS from Amazon, Microsoft's Azure, and Google Cloud from, well, you guessed it, Alphabet, with 1,529% growth in related revenue, and dozens of new data centers are planned already. Now, they do have some guidance with some risk attached. Let's take a look at the chart of Oracle for this. So we got here the earnings, massive jump. Looking ahead, Oracle guidance. Also, let's take a look at their guidance here. Overview and the forecast. Actually, this is the analyst forecast. So from this point on, it could still have 90% in it, but let's just think about it just in a couple of seconds. So looking ahead, Oracle guided Q2 revenue growth 12 to 14% and cloud growth to 32 to 36%. Now, think about it, but there's a catch, okay? Building data centers for AI workloads is extremely capital intensive. CapEx is ramping, buyback are paused, and free cash flow could stay thin near term. So what's the bull bear case scenario for Oracle? The book is as following. Exploding backlog, creating multi-year revenue visibility. OCI is growing faster than almost any major cloud provider, and Oracle's partnership let it ride the AI wave globally. That was the bear case. Traditionally, software revenue dips slightly. Heavy capex rises, execution risk, and at current multiples, let's go to the chart right here. So we are up here, which is a massive jump for Oracle. And I must say, Oracle is not cheap, meaning growth has really to deliver. Okay, so a couple of price projections. For a short term, I would say Oracle is going to revisit down here the 220, back to its moving average, basically. 221s. Crossing the 20-day moving average, crossing out the 50-day moving average, somewhere at the 50-day, the 100-day moving average, or even staying above maybe at the 20-day moving average. But it does need a massive correction, first of all. Medium term, so 3 months, something like that. I can even see it hitting the 100-day moving average, the 200-day, sorry about that. So somewhere underneath of 195. Why do I think that? Well, that would be a good, really good retracement, where I would say people will, so this would be a 78% retracement on a Fibonacci scale here, which would again make investors really bullish on the stock. Now, long term, it has to deliver. So we had a massive jump. It could get even higher than this. So let's do here, make this a little bit smaller. So it could go even higher than this. It could reach the 400 levels, $400 per share. But it needs to deliver the next couple of earnings. So what is up for Oracle? We will see. Maybe it is about to become the next AI infrastructure power horse, or maybe Wall Street is just overreaching the backlog hype. I don't know, but it's definitely overbought. I will not add at this point. I wouldn't add at this point to the shares, even for a 5-year lookout from here. I would wait for a better retracement, so at least back to its 20-day moving average. Okay, folks, that's it for me. This was Wealth Tom. I'm Noah BM. Stay safe out there. Catch you next time. Bye bye.